Good morning, everyone, and it's a Thursday morning here at RVN TV. My name is Joe Asumendi, and this is Coffee with Joe. But that's not the important thing. The important thing, as usual, is the guy that's sitting right next to me, Mike Menninger with Mike Menninger and Associates, a financial advisor, correct?
Correct.
Good, and it's nice to see you, Michael. Thank you for coming on board. Appreciate it.
Maintain our social distance.
There you go, absolutely. But listen now, financial advisors, you hear a lot about them, et cetera. But you have a kind of a different approach to financial advice, don't you?
Yes,
Would you
I
like to
do.
go through that, please?
Well, generally speaking, I look at generally financial planning, and a lot of people think financial advisors are associated with just the investing.
Right.
Interestingly enough, when I meet with somebody for the first time, I tend to go through a lot of detail, and the very last thing I talk about is actually their investments.
Really?
Yeah, it's understanding where their money is, what their goals and objectives are, understanding their taxes, and just making sure we have everything positioned before we actually look at the investments.
Okay, and now we're talking about a lot of things are going on right now in the world, and what do you see what do you see happening right now that is so much different in the world because of the situations that are happening?
Well, clearly, just by us doing a fist pump to start the day off,
Right.
You see a lot of concern out there. A lot of people are concerned about themselves, concerned about family members, and you also have a lot of people concerned about, am I going to lose my job? Am I going to have a job? Or many people right now are currently laid off.
Right.
And where's my next paycheck going to be? So, and for a lot of people who may have investments, or particularly those who may be retiring soon, they're very concerned about their nest egg.
Sure. When you talk about financial planning, there are so many more opportunities to work on things besides just investments, like you said, right?
Of course.
Okay.
Of course.
Would you like to go into that for us a little bit?
Well, sure. I mean, if you really look at financial planning covers 6 different areas.
Okay.
You've got cash management, tax planning, which is one of my favorite subjects.
Okay.
You've got risk management, which is insurance planning, and just making sure everybody's adequately insured. Investment planning, retirement planning, which combined with tax management and tax planning is really my favorite subject because that's what it's all about. And estate planning is just making sure that the federal and state governments aren't one of your primary beneficiaries and that your assets go to who you want them to go to rather than who the state says they're going to go to.
Okay. How did you get into this?
That's interesting. Very good question. I answered an ad in a newspaper.
Really? Okay.
Who'd have thunk it, right? My first career out of college, I was an environmental consulting engineer.
Okay.
And had done that for about 12 years. And I was getting burnt on the industry. I had a lot of entrepreneurial spirit and had a propensity towards numbers and the financial planning because I got involved voluntarily or involuntarily with doing a lot of the numbers with the business. And then I literally answered an ad for financial planner looking for someone who's a financial planner because I'd been doing a lot of financial planning for my mom, for my mother-in-law, and obviously for my family. I thought it was interesting, and here I am. That was a little over 20 years ago.
Really? I imagine you've seen a lot of changes in 20 years, haven't you?
No.
Nothing's just the same? I can't believe it.
No, not at all. Actually, it's kind of interesting is, what we're going through now, and I have a few staff members who are young, within 5 years out of college, and they've never experienced a recession. And, even though it's not defined as a recession, let's be practical. We're entering a recession right now that hopefully we come out of quicker than normal. But if you look at the history going into now, in the history of time, the stock market's only gone down 50% 3 times. And that was in the Depression, and then twice in the last 20 years, in 2000 and in 2008. And certainly I hope it doesn't go down 50%, but clearly we're dealing with 3 major catastrophic events in the last 20 years. They're seeing it for the first time.
Right.
And, what I'm trying to portray to them is, guys, take a look at this. You're experiencing history right now. Embrace it, but understand that, you're going to look back at this 10 years, 20 years, and 30 years telling your kids and your grandkids, embrace it.
About the recession in 2008 is a good example. How did you approach it then?
Ooh, how did I approach it then? It was interesting. To be honest with you, I was scared, only from the perspective of I worry about my clients more than I worry about myself. And I always joke that I am my most neglected client because I'm worried about everybody else. And for that period there, the markets were going down irrationally, and I felt helpless. And so it was volatile like it is now, but I felt helpless. And what's also interesting, in 2008, and I haven't really figured out, is it better to lose 35% in 3 weeks, or is it better to lose it over 17 months? I haven't figured that out yet. But at least what happened in 2008, people were opening their account statements and like, oh, wow, this is bad. And after a while, and then it got really bad. And then basically September, October, and November of '08 is when, on its downslope, it took a sudden dive. And people were getting to the point where when they were receiving their statements, they just take it and stuff it in a drawer. They wouldn't even open it because they were afraid to open it. It was tough then because I felt helpless. There was really not a lot you can do. I knew then that it would come back, but you don't want to sell when it's down as much as it was.
Right.
It was a really helpless feeling, and undoubtedly it was the most stress that I had ever gone through in my entire professional career, and my stress was my concern for my clients.
How do you draw the difference between what's happening now and that period?
Ooh. I think what's, again, one of the differences is that period was 17 months. Yes, it went down 55%. Now we're about 35% over a span of 3 or 4 weeks. The big difference between then and now is that the banks were the problem, okay? And it's not so much that they were a problem per se, but the banks were suffering. The banks were suffering from all of the mortgages going bad, and now the banks were left holding the bag. So that was creating a financial crisis where the banks were this close to failing. And the government had to bail them out from failing, because if they did, then it would have been significantly worse than the Depression. In fact, ironically, I had just recently seen the movie Too Big to Fail.
Okay, right.
And that talked about, not as a documentary, but they made a movie out of what happened. In fact, it was from the book. And I actually had my staff over at the house. I said, guys, you need to see this. You need to understand, because I will also say that we can draw parallels to that. And the parallels that we draw to it is, back then, nothing was safe. The only thing that was safe was treasuries and cash. And today I'm finding the same thing. So stocks started really going down around February 19th. That was the last update we had, basically. And since that time, we track it every day. I literally track it every day, because sometimes you can read behind the numbers. Starting about 2 or 3 weeks ago, bonds started going down. And usually the conventional thinking is that if stocks are doing poorly, move your money into bonds. And so typically, historically, when stocks are up, bonds are down, or at least going down. And if stocks are down, bonds are up. Well, in this particular instance, everything's down. And it's kind of interesting as to why. And the why the bonds are down is somewhat similar to the 2008. But where it's different now is that there's no systemic problem with bonds. And all bonds are is a company is lending money. And in this particular instance, what's happening is everybody's selling bonds to create cash. Now, I was having a discussion with someone, and because I talk to clients all the time, and this is the time that you really need to be talking to clients the most, and just to alleviate their concerns. And there's really no need to be standing on the ledge at this period, because what's happening is somewhat irrational too. There's a lot of fear baked into it, and I don't disagree with that. But it came to me that I'm part of the problem.
You are.
Yeah, exactly.
You're not the solution. You're part of the problem.
I'm part of the problem, right?
Okay.
So what I mean by that is very interesting, because if for some reason you had a $100,000 account with me, and let's say, for instance, it was divided half stocks and half bonds, and you call me up and said, Mike, I need $10,000. I'm like, okay. What am I going to sell? Am I going to sell the stocks that are down 30 or 40%? No. I'm going to sell the bonds that may be only losing 5% or 2%, or they haven't lost anything at all. So what am I doing? I am creating selling pressure on the bonds. Well, guess what? This is happening across the board. Everybody's selling bonds for creating the cash that they want or need because they don't want to sell the stocks. And if you have everybody trying to sell at the same time and not enough buyers, it creates an artificial dip in value.
Interesting. So, one of the things people I've heard say, with volatile times like this, you should buy gold or keep cash. What do you think about that?
It's funny you ask because I never really understood the enamor behind gold. And in fact, what's going on now, for the same reason that I was saying why people are selling bonds, gold has gone down 15% during the same period. So it may be people who hold gold are selling gold for the same reason, that I need the cash. What am I going to sell? I'm going to sell something that has gone down the least. I don't really understand, quite frankly, the enamor behind gold. Years and years ago, gold was considered the standard,
right? The
standard for money. I don't see it, and maybe somebody needs to teach me why. I don't see it.
Because it's interesting. Because it seems like if I watch television, I see a lot more advertisements, commercials about buying gold now. And I was going to ask you about it.
Don't get the hair standing back in the head. So I think what you're seeing there is it's like the ambulance chasers, and they're seeing an opportunity because obviously the people who are selling the gold per se, they may not actually be selling the gold, but they're obviously making money. They're salespeople.
Right.
And what they're doing is they're capitalizing on the fear factor and saying, hey, you know what? Everything is down. Now's the time to buy gold. The world's coming to an end. Now's the time to buy gold. The stock market's the biggest casino there is. Now is the time to buy gold. So clearly the people who are doing that somehow, some way benefit from you selling all of your assets and buying gold. And they're just capitalizing on the fear factor.
Right. And the fear factor is a big thing, as you said, because of the fact that people get scared. They're worried about their investments, as you said. They're worried about their future, paychecks, et cetera.
Of course.
So how do you approach calming them down?
First and foremost, anytime it comes to people and their money, it's understanding the most important component of risk is time. And if they don't need the money for an extended period of time, then inevitably during the course of time we're going to have dips. And I hate to hear the old stay the course, because a lot of financial advisors will say stay the course. At this point, and I talk to economists all the time, and someone said it's too late to sell, but also too early to buy. Basically, you have to have this discussion, when do they need the money? It's actually a very good analogy is, I had a client call me and said, Mike, do you think it's time to get out? And he actually laid out all of the scenario on the table. His wife is the primary breadwinner. He said, her job is secure. She makes good money. Her job is secure. And we have enough cash in the bank to be able to cover 6 months of cost of living. And, what do you think we should do? I said, well, you just answered your own question. The people who should be concerned about their investments are the people who may need them sometime in the near term. And one of the things that we always try to, when working with clients, we try to understand and always try to build the emergency reserve. And one of the things that I've always suggested to people is a home equity line of credit. A home equity line of credit makes all the sense in the world. It's probably one of the best financial tools one could possibly have, because it can truly serve as an emergency reserve. Now, need to be cautious with that, because if the first two words coming out of your mouth at closing are woohoo, then it doesn't belong for you.
Okay.
Because if all of a sudden they say, hey, this is an opportunity to spend more, no. But have the emergency reserve, because days like this are going to happen. And if you lose your job and you don't have a paycheck, then that's what the emergency reserve's for. So going back to the fear question, what do you do? Well, you have to wait it out.
Okay. Well, we have to take a break right now. So
Okay.
on that note, we'll be right back. Stick around.
a contender. I want a warm belly to sleep on.
A big house.
How do I look? Do I look good?
I want to play hard.
My nails done once a month.
I want.
I want a home. I just want a home. I want someone to love.
Last year, more than 30,000 companion animals came to us without homes. 20,000 of them were felines. Let's make some homes together.
Hello everyone, I'm Mark Iorio. I'm the host of Rainmakers Roundup right here on RVN TV. The show is about looking for people who are in competitive businesses that are doing something different and unique in the world of sales and marketing. Join me right here on Rainmakers Roundup on Wednesday mornings at 9 a.m. and then again on Thursday evenings at 6:30 p.m. right here on RVN TV.
Today's show is sponsored by Dr. Jacqueline. Take charge of your life personally, financially, and professionally. Visit drjacqueline.com to book an appointment today.
The session that we had with BCAT was really entertaining and enlightening. We were able to put together some very specific steps that we as individuals can take, and it was really fun to all come together and see sort of where we're going as a team and how we can all get there together.
We had a tremendous experience with the BCAT partners. One of the challenges that we have as an organization is to make sure that we have the right people in the right chairs doing the right thing. To do that well, you have to have synergy. You can try to dream up ways to make sure that your group does that, or you can rely on experts. We would recommend BCAT partners to anybody who's looking to take their organization to the next level.
I want to be a contender. I want a warm belly to sleep on.
A big house.
How do I look? Do I look good?
I want to play hard.
My nails done once a month.
I want.
I want a home. I just want a home. I want someone to love.
Last year, more than 30,000 companion animals came to us without homes. 20,000 of them were felines.
I can't say.
Well, welcome back to this episode of Coffee with Joe. I'm Joe Asumendi, your host, and I'm with Mike Menninger of Menninger and Associates. Mike, so glad to have you here, especially with the time we're talking about.
Thank you.
You were talking about 2008 and everything. Let's talk a little bit about how you work with millennials, since at that time they were probably in high school or not even thinking about the market at the time.
Well, that's interesting. The thing about millennials is they're clearly a different generation for two reasons. Number one, as it pertains to investing, a lot of the millennials are afraid of investing. Give me cash, give me something safe, because they grew up becoming an adult, whether it be their late teens, their high school, college years, and just out of college. Their first exposure to the stock market was the second of the doomsdays, if you will, or the second one in their lifetime, but the only one that they've actually seen. And so that makes them scared. The second thing is millennials are, let's be practical, they're just entering adulthood. They're finally making money for the first time, whether it be they're out of college or out of high school, they're making money for the first time. And especially if they're out of college, as we all know, a lot of the millennials are carrying a lot of debt because the cost of college has just escalated to a point where it's ridiculous. So when I work with millennials, I work with them no different than everyone else in that, first we look at their goals and objectives, but as it pertains to savings and investing, one of the things too is always recognize that if they have a loan in the books that's 8%, I like to ask people, if I could give you a investment that would earn a guaranteed 8% rate of return, would you do it? They're like, yeah, wow, this is great. Good, pay off your loans. All right. However, when it comes to investing, clearly those people who are working oftentimes are offered a 401k. And the 401k typically provides a match. And it's crazy if they're not at least contributing to the 401k and utilizing the full company match. And from there, now they're saving and have the opportunity to participate in the market. And I have these things that I show on a piece of paper and kind of show them. I also have charts posted on the wall, is that the market has downturns, but has always gone up. So during the downturns, if you explain the math behind dollar cost averaging, it actually shows that when you're making these contributions, when the market's going down, it's actually playing to your advantage because you're buying more shares at a reduced price so that when it comes back, you're a much better chance of being ahead of the game. I also have simple Excel tables that I generated that show the sooner you start, the better off you're going to be later. And the example I will use is two twin brothers at the age of 22. The one brother decides he's going to put $5,000 a year away for 8 years, while his other brother realizes that beer, fast cars, and women are more important. And then at the age of 30, he says, I'm going to start. Well, first brother decides at the same age of 30, I'm going to stop. Believe it or not, at the age of 65, the brother who put money away and saved from ages 22 to 30 for 8 years had more money than his brother who contributed from 30 to 65. So it's the power of compounding. And it's important to discuss with millennials the importance of making these contributions early. These same tables, I demonstrate the difference between 2%, 6%, and 10% long-term rates of return, and it is staggering, the difference between them. And just try to fill them with information. I believe education and knowledge are powerful. And the millennials are smart, they're just not experienced, and there's a huge difference between those two words. And their only experience with investments is watching the market go down.
Exactly. So you educate them as well.
Absolutely.
And that's the most important thing.
Absolutely. It's not just the millennials. I educate all of my clients.
Okay. In these kind of uneasy times, what do you provide your company to reassure people on a daily basis?
First of all, anytime someone calls, I'm giving them more than just a minute or two of my time. Typically, if they're calling, and if they're calling with concerns, I'm going to give them probably half an hour on the phone. Talk them through everything and educate them to make them feel better and comfortable that I'm watching their back and recognizing that I'm not hiding. And I've heard people say, well, someone's meeting with the financial advisor, not, someone selling into the financial advisor, and the phone rings. Oh no, it could be a client. I don't want to answer it. So the key is to really, again, as I indicated earlier, is to maintain, this is the time that the clients want to talk to you and want to hear your voice the most. The other thing I do is, and I've been doing this for quite some time, is every Monday I take and forward one of the economic summaries that I get, and I get a lot of them, but one that's a little bit more in layman's terms. What I do is I forward it to my clients, okay? And with it, I provide a 2 or 3 paragraph narrative in people terms, what's actually going on out there. And to the extent that I can, I try to dummy it down, and I don't mean that in a negative connotation. I try to make it so that the average layperson can understand it. And oftentimes I use analogies that are real life analogies so that people can understand it. And it's remarkable, I didn't realize until recently how many people actually read it. I'm getting a lot of responses. Thank you very much for keeping us informed, and thank you for this. And I actually had one time a client call me and said, "Are you okay?" I'm like, "Yeah, why?" because you didn't send it out for 2 weeks. I'm like, oh my gosh, I didn't realize that I didn't receive it to trigger to send it out. So it's good. People are reading it, and I like to keep them informed.
That's really important because, again, the only thing to fear is fear itself, like Roosevelt said.
Absolutely, absolutely.
And I think in these times, how do you see us coming out of this?
Well, first and foremost, fear is bred by uncertainty. People have a tendency, and this again was one of my analogies, if your house, you come home to see a fire burning in your kitchen, you quick pick up the phone, you call the fire department. Meanwhile, you're standing on the curb watching them put out the fire. It's human nature to be fearing the worst.
Right.
And that's what's happening right now. Uncertainty breeds fear, and human nature fears the worst. So what we really need to do is get our arms around what's going on with this virus. And first we need to see the United States has reached its peak and is over the peak, and or we have some type of treatment for the virus. I know the drugs that are out now, they're still testing them on coronavirus victims. Once we as a nation, as a people, feel that we got our arms around it, and we don't really, okay? Once we do, then I believe that you're going to find investor confidence is going to come back, because now, if you understand the value of investments, the underlying value of the investment is the company and the company's ability to produce earnings. And the problem is right now is nobody knows yet, they can't define or quantify what their earnings or earnings hit is going to be. For example, how long are the airlines going to be shut down? Not shut down, but how long is it going to be? How long are we going to be kept away from going to work? How long? Well, it's all predicated on when are things going to turn around. What's also hidden behind the scenes here that's very little talked about, because every day, every moment, what's on TV is the coronavirus, is the oil war going on between Saudi Arabia and Russia. So interestingly enough, the price of oil is hovering around $24, $25 a barrel. Well, ironically, 4 years ago, I sniffed out and was concerned about a big recession coming because the price of oil dropped to $26 a barrel. And the fear would be if oil companies started going down, it would drag the banks with it. Well, it's hiding right now. Oil dropped under $20 a barrel. But because of the coronavirus, we're not seeing it. But the fact of the matter is that we have two problems going on. And they're going on simultaneously. It's just one of them we don't see or hear about. If the Saudis and the Russians come to some type of an agreement and oil comes back up, it's really going to help the economy and the markets, but we still need to get over the coronavirus. I'm hoping that's weeks and not months.
So is everybody. So you think there's a lot of hype going on and really doesn't belong?
Oh gosh, you're going to take me down a slippery slope here. Maybe. So the hype is intended to be precautionary. And I genuinely and sincerely believe in being precaution. Being cautionary.
Right.
And by having people stay at home, having people, work from home, not go to restaurants, is maybe being overcautious. But that's okay, because maybe that's what we need. Because if we let everybody run around, then there's a lot of potential for it being spread. And I just recently heard, and I can't quote any of the numbers because I heard it and it went through me so fast, is I believe it was Iceland had tested a whole lot of people. And what they found is that a lot of people had the virus, but showed no symptoms. And if that's the case, and that's what concerns me about the young crowd, is if they're all running around on the beaches and doing the gatherings and going to bars, that they're spreading it, but they have no symptoms. Well, fine if they have no symptoms. The problem is that now they potentially are spreading it to other people who may show the symptoms who are more vulnerable.
Right.
So I think it's good that we're taking the precautions, but I would like to see people going back to work as long as we take necessary additional precautions, wearing masks if we need to, washing your hands with the sanitizing, the sanitizer, and even restaurants. If you opened a restaurant. I'm concerned about the small business.
Sure.
And even if a restaurant were to open and all of the waiters and waitresses had to wear latex gloves and a mask, and everybody walking in had to use hand sanitizer, and all the tables were separated by at least 6 feet, at least the restaurant can open.
Right.
And if they can make enough money to prevent them from going under, then I would love nothing more to see that.
Yeah, I think that's one thing that people I don't think are seeing. They're looking at the health factor of it and not the economic problem. Because the economics are there, as you're right.
Yeah, I don't want to underestimate the health factor, because it sounds like I'm veering, I don't know what the term might be, but it doesn't seem like I'm concerned about the health factor. I absolutely am.
Sure.
But, what they're doing makes sense too, because of the fact that as a nation, as a world, we weren't prepared for this. We weren't prepared for having enough masks, enough hospital beds, enough ventilators. And what this is doing is, they're saying flatten the curve. And it's understandable. And until I saw literally the curve, and they're saying to flatten the curve, what that's doing is it's preventing a immediate influx of patients to the hospitals, and the hospitals not being able to handle it.
Right.
And that is absolutely understandable. So I'm hoping that maybe there will be some type of the drug that they're testing can, if a person's symptoms are really bad for 6 days, and that they need a ventilator, let's say, for 6 days, if they could trim it down to 2 with these, medications, well, then guess what? That frees up that ventilator for 3 times as many people.
Right. You're a wealth of information, by the way. I mean, I'm really glad that I had you on my program. But we're at the point now in my program where I want you to look in that camera right there and tell people how they can reach you and who should call you.
Okay. Well, my name again is Michael Menninger. I'm a certified financial planner. I have 2 offices. My main office is located in Trooper, Pennsylvania, which is outside Norristown or near King of Prussia. My second office is located in Feasterville, Pennsylvania, which is, I guess, was it Bucks County? I have a website. My website is MAA, like Menninger and Associates, maaplanning.com. My phone number I can always be reached at is, my office number is 610-422-3773. And again, please feel free to visit my website. I try to be as uploading things as much as I can, try to be informative, tricks of the trade. I just started. And again, education and knowledge, I believe, are the most important things that we can do. And that's my mantra.
Mike Menninger, thank you so much for joining me today.
Thank you. Thank you. It's been a pleasure, Joe.
It certainly has. And I'll tell you something. Anybody out there worried about your money or your investments, give Mike a call. He's gonna tell you how to get through this, and we're gonna have Mike back as soon as some of these things calm down. And thank you for joining us, and we'll see you next time on Coffee with Joe.
Thank you, Joe.
Thank you, Michael.